Hello there, Mavericks. This is Rob Reinhold, and this is the Currency Room. We just got through our first week of March. And I tell you what, it was a really good trading week, just a phenomenal week of trading. And hopefully, everyone, I don't know how long you've been trading for, but you'll recognize that some weeks are great and some weeks are not great. And as a trader, especially if you are a trend trader and a directional trader, how much you can back off of the bad weeks and how much you can be more active on the good weeks will definitely help your performance overall. The idea that you can just show up every single day and click a button and trade and make money, it's not really how the world works. You need to pick and choose your moments when the market volatility is there, and it is there right now. So let's go ahead and get into it. There's so many things happening right now, but let's just focus on each asset category on its own. Let's talk about equities first. Equities have continued to sell off. They've continued to sell off. And it's really coming because of the tariffs that are coming or have been implemented. Here's the problem. The market was worried about tariffs, and the tariffs, were threatened, and then they were delayed, and now the tariffs have been put on, and now they've been pulled back, and now they're maybe here, maybe not. I've got to say, we've moved from the threat of tariffs being the thing the market doesn't like to now just the uncertainty of tariffs. It's more difficult for a business. I mean, just think about this. If you're a business and you get hit with this tariff, you import things from China or Mexico, and all of a sudden it's like 25% more. Okay, you know where that is. You know where it stands. You know you've got to adjust some things, but then you can keep going forward with your business. In the current situation, 1 week, you've got 25% tariffs. The next week, they've been paused, but now you think they might be put back on in a month. All of a sudden, that's more negative. It's now freezing businesses to where they say, we can't make any decisions going forward. We can't do any spending. We can't do any changes going forward until we know what's going on. So the more that these tariffs get put on and taken off, it's actually more negative for at least for the economy. We did hear from the ECB last week. They cut rates as expected. That was very, very expected. And they came out and they said, look, this was expected. Everyone knew it was coming, but don't be so sure going forward. And they said a funny thing, which I don't know how this is even possible, but words are funny sometimes. They said they're now going to be even more data dependent. Like, you're either data dependent or you're not. You can't be more data dependent than you already said you were. But that's basically what they said. Let's take a look at some of the news for the week. I want to take a look at two manufacturing reports out of the U.S. We had U.S. manufacturing on Monday, and then we had the services PMI on Wednesday. Services PMI was better than expected. Both of these came with higher prices paid. So again, inflation is creeping back into the system. There's no question about it. We heard from the Swiss about their inflation, higher than expected. So again, that's something we're hearing, higher than expected, higher than expected. On Friday, we got the employment reports from both the U.S. and Canada. The U.S. was a slight miss, but let's call this in line. The unemployment rate ticked up a little bit, but this was in line. Remember, this is what the market wants. It's a Goldilocks number. Not too hot, not too cold. We've been worrying about not too hot for a long time with inflation, but now we're worried about not too cold, meaning we still want to see good job growth. 150,000 jobs in the U.S., that's pretty good. Canadian employment, they missed on the amount of new jobs created, but the employment rate dipped a little bit. So again, not too hot, not too cold. That's what we're getting here, and that's why the market could put together a rally on Friday. So let's go ahead and take a look at the last week. Let's take a look at the final numbers for the week. And the S&P was down about 3%. At its low, it was down about 4.5%. It bounced back a little bit on Friday. Let's talk about crypto. There's so much to talk about this week, and I don't want this session to go 45 minutes to an hour because it could. This week, a couple things were announced with crypto from the U.S. president. Talked about making a Bitcoin reserve in the U.S. and also talk about making basically a digital dollar basket made from Cardano, Solana, and Ripple. Okay, these tweets, again, this is not a political statement. I'm just stating the facts. These tweets are causing a lot of havoc and a lot of movement. And the more that they do this, what's going to happen is, first of all, the less people are going to respond to them. So it's kind of like the boy that cried wolf. The more you say something and then you don't follow through with it, the more likely people are to not pay attention next time. So we will start to see diminishing effects from whatever the US president says if there's no implementation of it. And I remember when I saw the True Social post come across that they're going to make a basket out of Cardano, Solana, and Ripple, I remember thinking that's never going to happen. That's never going to happen. Why would you make a basket with those cryptos? Now, of course, those cryptos shot up, but then they sold right back off. And this is just most likely a pump and dump. And again, I'm not making this as a political statement, but it looks very, very fishy here. So crypto, I think, is absolutely a very treacherous place to be on the long side or the short side. I am just not looking at it whatsoever at all. Let's take a look at the S&P. The S&P broke below this key level, 57.75. But then you can see we came down and we hit 5,700 and we bounced. One of the things I want to point out in these 4 candles here, well, let's take a look at all 5 candles for the week. All of the candles had long lower shadows, meaning that the buyers were there. The buyers were there. Here's the problem. They all went down. So it means that, yes, there's buyers there, but the buyers aren't there for months or weeks. They're there for minutes. This is a sell on rallies market. And until that changes, we just have to consider every rally is likely going to fall apart. It's just where we are at the moment. Huge moves in the Forex market. Euro up 3%. I mean, that's just a killer move on Euro. Dollar was the worst currency. I've liked dollar short here for this past week. And I talked about on my Tuesday session, talking about dollar Swiss franc and euro dollar as being probably the best trade. Is that going to continue? We'll take a look at the charts. I also said that I thought the Aussie and the Kiwi were still good shorts, but they were just sold out. And that's pretty much what we saw here. They didn't go anywhere. They didn't rebound when the markets rebounded. So for me, they are still decent shorts. But I'll tell you what, the CAD and the dollar are looking like the best shorts out there. And I really like them both going into this week on the short side. I'm not going to spend any time on crypto because I think it is untradeable at the moment. I just think it's untradeable. I think there's lots going on and not real legal stuff going on. So whenever I see that, I say, you know what, I will check back in when it's a little bit more tradable. All right, let's take a look at some charts. Here we got the 10-year bond. 10-year bond came down, bounced at 415. And that's where we bounced here. We got 440 on the upside. I imagine we'll probably come back up here, touch this. The new range is 415 to 440. That's the new range. If it breaks below 415, it tells you that equities are in trouble and the dollar is likely going to be falling as well. If we break above 440, I would become less short dollar biased and move more to a neutral or maybe even a bullish bias on dollar. But until that happens, I still like dollar on the short side. Here's crypto. And look, I'm not a huge crypto trader anyway, but I just look at every one of these candles. Every one of these candles has huge wicks to the upside and downside. And I know crypto is usually volatile, but if you're trying to put together a 2 to 3 day trade and you've got to stop, this stopped you out of either a long or short every single time. It's just too much craziness and volatility going on. We want to see when predictable trends happen. This is a move that we can take advantage of. This, even though it's a smaller move, look at that. No real big wicks on any of the candles. So it just tells me, stay away. It's untradeable at the moment. Next week, we've got CPI out of the US. Now, I'm surprised that the market is at 0.3% because every single number that we've had has basically said that inflation is higher in all of the manufacturing numbers. Every number you see, inflation's higher. We'll see what it comes out at. I think that if it comes out at 0.3, I think the market takes a little breath of relief, but they're going to be not convinced that it's away. Every other number is showing that inflation is creeping back in. If it's 0.4, it's going to be the same story. That the Fed isn't going to be able to cut. Equity markets are going to fall. The big question is, what does that mean for the dollar? Because the dollar has been weak. Even though inflation has been rising, it's been weak because all the other central banks have been a little bit more aggressive. One day later, we get the PPI, which is not going to be as important, but I want to talk about unemployment claims. This number comes out every Thursday, and we basically ignore it every Thursday. It's going to start to become more important as people are getting laid off from their jobs. This number is an early number before the payrolls report the first Friday of the month. So we do need to start paying attention to unemployment claims at 8:30 a.m. on Thursday for dollar trades. And we do have the Bank of Canada on Wednesday. They are going to be likely cutting rates by 25 basis points. That's expected. What they say going forward is going to be more important. The last news, and again, these are all big news points here. So I expect another great week of trading. Consumer sentiment out of the US. This has been the number that has been spooking markets, showing that consumers are less confident going forward and that they are pessimistic about inflation. That comes out on Friday. So just a ton of good trading things on Friday. And I want to just talk about these equity markets. We're not at a bear market yet, but we're close. Now look, I shouldn't say bear market because the technical definition of bear market is it's lost 20% already. But let's say a bearish trending market where we're seeing lower lows, lower highs, moving averages falling, all the things we look for. We are very close, but we're not there yet. We're not there yet. We must see a failed rally and then a break of recent lows. At that point, all of a sudden, now it's a really strong risk off move we're seeing in the markets. Let's take a look at all of the currencies, score them from +3 to -3, and find out where we're going to hunt this week. All right, crypto, you know what? Let's all do ourselves a favor. Look, if you want to trade crypto, do your own analysis. I am not going to be doing any analysis in crypto whatsoever because, as I said, I think it is not tradable at the moment. Lots and lots of big wicks with no real move. We got some of them going up, some of them going down. There's no clear trend whatsoever. We want predictability. We want asymmetric risk where we can have more reward than risk. In this environment, I just don't see that in crypto. Forex is looking much, much better. Here we have the dollar. We got moves down. Again, this is what we're seeing. We're seeing these trends. Okay, when big bounces, we bounce up to the 50-day moving average and we come all the way back down. All right, we're getting a little bit of bottoming action here. We got a green candle on Friday. Okay, so for me, dollar is likely at the bottom of its little range here. Let's let it have a little bounce. Let's let dollar have a little bounce. Well, then we'll go ahead and take some shorts on it. So for me, I like dollar quite a bit on the short side, but I just don't like it early in the week. If I look at a 4-hour chart though, boy, this base is forming to where, okay, maybe we don't get a bounce. And if we don't get a bounce, I'm very happy to play a low base breakdown on dollar, but still waiting for, at least Monday, Tuesday, Wednesday. I want to see what happens if we get a little bounce or if we turn back over. It would not surprise me at all if that we based until Tuesday when we saw the CPI report and then the dollar makes a move either to the upside or downside. That's probably the most likely scenario. So dollar, I like it short, but not at the first of the week. Yen, I like the yen long. The yen long is showing us everything we want to see. The only thing I want to point out is that we reached up to this level here on Friday, but then had a long upper shadow. Now, that's not so much because of the yen pulling back, but it's most likely because of the equity market rallying. So the equity market gave a nice rally on Friday. Okay, so that took the wind out of the sails a little bit on yen. All we're seeing is a little pullback on this 4-hour chart. I really like yen here. I think a pullback for the next day or two, I think looks really good. So on yen, just the opposite of the dollar. I like it on the long side, but not at the first of the week. Here's what's moving right here, right now. Swiss franc. So Swiss franc, that's a nice break to the upside. I like everything on this on the daily chart. The big question is, when's it going to be ready on the 4-hour chart? And it's just not yet. It's just not yet. But to me, Swiss franc looks phenomenal. That higher than expected CPI is likely going to continue to push it. The euro had a huge breakout. Now look, the euro has been going nowhere. And I've been saying when they do this, I am not interested. I was not interested in euro until Tuesday. And Tuesday I was very interested and made a nice trade here on euro dollar to the upside. Okay, where are we here? We're looking great. We're looking at a +2 here on the trend score. We're looking here at -1 here on the velocity score. So I like it to the long side. The fact that this had a 3% rally, I'm going to let this one cool off a bit. I much prefer Swiss franc and the pound to it. And in fact, the pound is my favorite trade for the week because we're high basing already. We already had our move the previous week, and now we're high basing. I love that kind of price action. Just need to see that velocity score turn around and become more bullish. To me, pound is the #1 trade on the long side. CAD is looking weak, continuing to fall. Take a look at these last candles. Lots of long lower shadows here. So I would be a seller on rallies. I would not be chasing this on some low bases. Seller on rallies on the 4-hour chart. Where are we right now? We're having a little rally here on the 4-hour chart, but nothing great. Again, it's an okay trade on the short side. Let's see if we can find something better. We got the Aussie. We came down. We bounced. Came up here, and we bounced again. Same thing here on Aussie. I like it short. I think it looks good, but I want to be short off of rallies. So nothing's looking really great early on in the week. Here we have the Kiwi. I like this one a little bit better than where we saw the Aussie because we just made our reversal candle. We just got our confirmation candle. So Kiwi to me is the best looking short right here, right now. But it's not great. It's just not great. It's not phenomenal like we like to wait. So let's take a look at our trend board. You can see yen and all the European currencies. That's where I'm going to focus on my longs. And on the short side, we got Euro, CAD, Aussie, and Kiwi. You can see a lot of times we have everything bunched up in the middle and we have no great trades. Look at where we are. Everything is trending at the moment. This is the kind of market we like to be more active in. What's moving right here, right now? Well, we got yen is moving +2. We got Aussie that we want that to be short at a +2, so we're not looking to do that. The only thing really trending is Swiss franc, but we want to be long Swiss franc. At least I want to be long Swiss franc. So what that tells me is there's nothing ready yet. Everything's developing. So let's go ahead and take a look at some of these potential trades, and let's take a look for, developing trades later in the week. So my favorite pairing for the week is pound Kiwi. All right, pound Kiwi to the long side. Here's the daily chart. And you can see we've cleared out some pretty significant levels here. And we had this 3-day pullback. And here we have this nice confirmation candle. So for me, the daily chart is exactly what I'm looking for. We had a 5 or 6 day rally, a 3-day pullback. We got our confirmation candle, which is an engulfing candle. I'm ready to go on this one. The only question is the timing. Where's the best timing to enter this? And you can see we are up against a little bit of resistance here. We're having a little trouble here on Friday. I would love to see either a base here where we go sideways and then we break out. So a breakout above 226.70, somewhere around in here would be really a green light for me. Or if we come all the way down and we come down to this 224.70, and anywhere in here, I would love to be buyer at the low end of the base as well. As you can see, nothing is ready to go right here, right now. So for me, this is my favorite pairing here, is pound dollar. But let's take a look at some others. I'm not going to take a look at euro because, like I said, euro went 3%. I want to be a little bit more defensive. So I'm going to take a look at stuff like CAD Swiss franc. Let's take a look at it on a daily chart first. You can see the momentum is there. We want to find stuff with momentum. And take a look. This thing is broken. A pretty serious trend line here. Yes, we had this little wick over here that might provide some support, but I like this to the downside quite a bit here. The only question is timing. So we got the trend. Hey, the trend is moving. This has got momentum. Where is the timing? You can see this is a 4-hour chart, so we've just had 24 hours of pretty much straight selling. We're starting to get some buying. Let's let this thing bounce up a little bit. I think a bounce up here into the 6160 area. 6160 area, I would definitely be loving an entry right around this point. There should be a little bit of resistance up there. So look, this is another one. Is it a great trade? No, it's a decent trade, but something I'm definitely looking for on the week. Other than that, we're just going to be developing trades as they go, redoing all of our scoring as the markets change. So the question is, reversal or continuation? We talked about this last week. The markets are in a sell-off. Is that going to continue? If it's going to continue, long yen, long Swiss franc, long European currencies is the trade to make. If it reverses, and let's say we start to get some bullishness and we get some resolution on the tariffs, what is the correct trade? To be honest with you, I don't know at the moment. Aussie Kiwi typically should be the trade, but I need to see them start to work a lot better. So I'm pretty clear on, if these equity markets stay weak, where the trades are going to be. If we do have a bounce, I got to just really reevaluate everything because I don't have a strong call on where I want to be hunting then. Thanks for joining for the Currency Room. Have a great weekend. Goodbye, everyone.